Good morning, everybody, and welcome to GambleAware's webinar on exploring financial institutions and the use of consumer data to prevent gambling harms. We're delighted to have you all with us today, and I'm particularly pleased to introduce Helen Undy, who is the Chief Executive of the Money and Mental Health Policy Institute, and she's very kindly agreed to chair the event for us today. So over to you, Helen.
Thank you, Jane, and thank you to our friends at GambleAware for inviting me to chair this event. I'm really honoured to be here today and excited about the discussion, but also the research that's being launched this morning from PFRC and from the Behavioural Insights Team, and the insights we're going to hear from our speakers as well. As Jane said, this morning's discussion is all about the role of financial services firms to help tackle gambling harm, and particularly what the potential is for use of transactions data within that. I'm the Chief Executive of the Money and Mental Health Policy Institute, and this is an area that's been a real focus of our work over the last few years. So it's really great to see so many organisations working together, and the momentum that this area of focus has really developed. Couple of little bits of housekeeping from me. As you're watching online, we would encourage you to ask questions to our speakers. Our speakers are going to do some short presentations, and then we will have a Q&A at the end. When you're watching, you can see a Q&A icon on your screen. Please click on that and type in your questions. They will come directly to the speakers. If it's for somebody specific, do let us know in the question. The event's being recorded, so you can watch it back later or share it with your colleagues and other people who you think might be interested, and we can share details of where to find that at the end. So, as I say, this area of work is something that feels like it's really taken off over the last year or so. At Money and Mental Health, we've been talking to banks and other organisations for quite a while, and it feels as though card controls as an option for something that people might have to control their gambling behaviour have almost become the norm across quite a lot of institutions, thanks in no small part to Natalie and her work at Monzo, which I'm sure we'll hear a little bit more about later on. So today is about discussing what have we learnt, what do we know is working, but also what can we do next, and that really thorny issue around how do we look at customers' transactions data and how do we proactively offer help and support. I'm going to hand over in a minute to our speakers. We've got three brilliant speakers. So we've got Dr. Simon McNair from the Behavioural Insights Team, who's going to talk to us about their research. We have Professor Sharon Collard from the Personal Finance Research Centre at the University of Bristol, who's today launching a fantastic guide for financial services firms. And we've got Natalie Ledward from Monzo, who can talk to us about her experience of actually developing and creating some of the tools that we're using today that are having real practical application to help tackle gambling harm. So I'm going to hand straight over to Simon. Simon's going to share some slides with us. As I say, if you've got questions for Simon, pop them in the chat as we go along, and we will come to them at the end. Thanks, Simon.
Thank you very much, Helen. And good morning, everyone. Thank you for tuning in this morning. I'm delighted and indeed very privileged this morning to be the opening speaker. And I'm also delighted to finally be able to share with you some insights this morning from a report that we're launching today in two parts. And I'll be sharing you just some illustrative findings of what we find across this 2.5-year project, where we've worked with two major banks to explore how transaction data might be useful in helping us to understand how gambling fits into people's wider financial lives. So a little bit of background about what this project is and what it's about. So the project was commissioned by GambleAware, and it forms part of what's known as the Patterns of Play program of research. This is a program that is aimed at contributing to the Gambling Commission's national strategy to reduce gambling harms. And really, it seeks to explore how existing and new sources of data can be used to better understand gambling behavior. Why bank transaction data we think is an interesting prospect in that regard is because existing data that we use to understand gambling behavior in the UK, for instance, typically comes either via self-report type research, so that is interviews and surveys where we directly ask people about their gambling behavior, or it can sometimes come via what we learn from operator-based data as well. Self-report data and self-report research is the kind of the rigor, the norm really, in terms of what we know about gambling behavior in the UK. That was actually a topic of GambleAware, a GambleAware webinar, I think last month, where there was a launching of a really, really great report by Patrick Sturgis at LSE, London School of Economics, who's really tackling the kind of thorny issues of how we do that self-report research better. Operator data is a bit more of a trickier prospect. We don't typically have access to it. And so we wanted to explore whether or not bank transaction data could give us some kind of new inroads to helping us understand people's gambling behavior. Some of the advantages that we think there are potentially of using bank transaction data, it allows us a much more holistic perspective of people's gambling behavior. So it allows us to see multiple different operators, for instance, where a customer might be making deposits, for instance. It also allows us to see how gambling fits into sort of other aspects of people's financial lives, such as other spending, for instance, or also their use of savings or their use of credit, for instance. It's also an objective indicator. So we're not relying on people being able to accurately and faithfully recall their behavior here. We see it objectively in the data itself. We can see where deposits have been made, when, how frequently, and how much. And so in this research, we've explored 4 broad sort of themes of questions, which I'll touch in over the remainder of the talk this morning. So, starting with kind of very fundamental questions about what can transaction data tell us about who gambles, how much, and how often, for instance. Then we look at how gambling expenditure relates to other forms of kind of typical everyday spending as well. Then we look at how gambling relates to people's savings behavior and their use of credit. And then finally, we look at how people make use of gambling block functionality. So I'll touch a little bit on all of these themes today and give you a flavor for some of the insights and some of the observations that we've made. Much more in the reports that we're launching today as well. So this is just to give you kind of an enticing flavor, hopefully, of what you'll see in those reports. So in working with banks, we were conscious of the fact that just asking a bank to share transaction data with us might be a difficult prospect. So we actually offered kind of 3 ways of working with banks in order to try and create kind of an equitable collaboration that didn't just rely on sharing transaction data with us. The first option that we offered was to ask, could we have access to your transaction data? And one of the banks that we worked with did kind of meet with us on that level. We offered another option whereby a BIT analyst would be seconded at the bank to carry out the work and to work with the bank's in-house analysts. So that would to sort of get around the idea of having to share data out of the bank, which is tricky logistically, pragmatically, legally, bureaucratically, administratively, and all of that. And the final option that we offered, which the other bank that we work with took us up on, was that we shared our analysis plan with the bank's in-house analysts, and the bank's in-house analysts carried out that work and then shared with us the outputs of that. So again, sort of circumventing the need for direct transaction data sharing to happen, but still allowing us to sort of interrogate the transaction data in a way that we would have had we had direct access to the data. So just a little bit of background on that. We kind of approached banks with these 3 different options and kind of tried to explore the possibilities of how we could do this work collaboratively. Before I really get into it, I just want to outline as well some of the limitations of this data. So there are certain things in this data that we don't and aren't able to capture, and I should flag those up front. The most obvious one is that given that we're using transaction records, these are all digital card-based transactions. So we're not capturing cash-based gambling at all in this data at all. So that's a limitation. We also aren't able to see gambling purchases that might occur as part of kind of wider itemized purchases. So for instance, if somebody buys a lottery ticket as part of their weekly shop at Sainsbury's, we won't be able to capture that because that transaction record will show as a transaction for Sainsbury's and not capture kind of the gambling part of that transaction. And another limitation is that we don't capture and we can't capture gambling deposits that are ultimately made via third-party payment providers. So if somebody deposits money into their gambling account via PayPal, for instance, then that transaction will show up on their banking records as a deposit to PayPal and not to a gambling operator. So we can't capture those either. So there are limitations to kind of the insights that we can draw from this data. To give you a little bit of insight as to who the customers are that we work with and how we segmented them for the purpose of this analysis. So we work with Monzo and with HSBC on this, and there was slightly different approaches to how we segmented the data. And because of that, we aren't, as part of this research, drawn to make kind of cross comparisons between the banks. And that's because the segments are composed differently, essentially. So with the case of Monzo, we had access to about 10,000 customers. With the case of HSBC, we had access to about 1.5 million customers. We had about roughly 11 months worth of transaction data for each customer in the Monzo data. And we had about 3 years worth of transaction data when it came to HSBC. So in terms of the segments that we that we kind of divided those 2 different groups of customers into, in the case of Monzo, actually the majority of customers that we had access to didn't actually have any gambling transactions. And so amongst the gambling customers in the Monzo cohort that did gamble, we separated those into 2 segments. One that we labeled as being below average gamblers and one as being above average gamblers. So that kind of reflects the overall magnitude of money that those 2 segments were spending on gambling. In the case of HSBC, it was slightly different. So HSBC actually constructed 3 segments in their data and then sort of gave them to us, and we used the labels that they ascribed to those segments as well. The basic gist here is really that these segments, each segment is characterized by progressively more gambling in terms of amount spent and generally frequency too. I'm going to use the color coding that you see on screen here throughout the remainder of the presentation. So where you see blue, we're talking about the lowest gambling group, where we see, and then that kind of the magnitude of gambling increases as we move into the yellow group. And then finally, the amber group, which is labeled as very concerning, that's only present in the HSBC data. So the HSBC data, we have 3 segments of gambling customers. On the Monzo side of things, we have got 2 segments. Let's get into some findings. This is where it gets interesting. So in terms of our research themes, I mentioned we had 4 research themes. And our first theme involved kind of more fundamental questions, including how much do people gamble, how frequently, when, to what extent, etc. What I'm showing on screen here is both the Monzo and HSBC customer data together. This is the only slide where I'm going to show both banks side by side. In the remainder of the talk, I'll choose to sort of focus on one bank or the other. But for these more fundamental basic questions, I'm kind of showing you both, giving you an insight of both banks. The trends that you see here are not themselves that surprising, I don't think, as we move from left to right in the table. So that's from the lowest gambling group to the highest gambling group. We see increases in the average number of monthly gambling transactions from around about 1 per month in the lowest gambling group all the way up to as many as 36 per month in the highest gambling group in the HSBC customers. We also see increases in the average total monthly amount of gambling deposits and in the average total number of operators that the customers transact with. Generally about kind of under 2 for the lowest gambling group and upwards of 5 for the highest gambling groups. I think some of the group differences that you see here are pretty alarming, I would say. The highest gambling group, for instance, in the HSBC customer data, spending on average over £2,000 per month on gambling across an average of 36 transactions versus the lowest gambling group spending less than £20 per month on 1 transaction is a pretty startling contrast. I think even the leap from monthly deposit amounts between the middle gambling group and the highest gambling group is also still pretty eye-catching at that. And the key takeaway from here, from this sort of first research theme, is that even taking banking transaction data at this very basic level of analysis, there's already really useful insights to be gained in terms of laying bare different cohorts of bank customers in terms of what their magnitude and frequency and level of gambling is. So that's research theme 1, just very basic, simple, fundamental questions. As we move into our second theme, both sets of data, so both banks' sets of data allowed us to look at how people's gambling deposits compared and contrasted with other types of everyday spending. And here today, for the sake of the presentation, I'm just going to focus on what we learned from the HSBC customer data on this theme. So for each customer, we had information on essential and non-essential spending. So by essential, we mean things like rent, mortgages, utilities, transport, medical bills. Non-essential spending is basically everything that's left after essential spending has been taken care of. So non-essential spending includes gambling. I should flag that as well. With essential spending, what we're able to do is we can actually work out a measure of disposable income for each group, which is shown in the top row of the table that you see here. And so that disposable income is essentially essential spending subtracted from cumulative monthly credits to the account. Okay, so that cumulative monthly credits to the account is like a proxy for income, essentially. It's more than income, but it's kind of a crude proxy for what's somebody's income. And it allows us to work out the kind of turnover of each customer's account as well. If we take disposable income in the top row and average monthly non-essential spending together, which is the second row, we see the same trend from left to right for the gambling groups. Both increase as the magnitude of gambling also increases. This also likely probably reflects that the total monthly account income is also higher as we move up those gambling groups as well. So bear that in mind. What I'd really linger on here, though, is the middle group, I think. What we're showing here in the third row is that this group spends about 20% of its monthly disposable income on gambling. And that amounts to about £570 or £580. And that's a particularly startling observation for this group, because when we look at monthly account turnover in the final row on the screen here, which is basically all outgoing subtracted from monthly account income, this group in particular, the middle gambling group, is about £420 in the red in an average month. Maybe counterintuitively is the fact that if you look at the highest gambling group, who spend multiples more on gambling each month, they're actually the only group in this data who, on average, end each month with a surplus of income. And that's an observation I'll come back to at the end, whenever I kind of present some final reflections. Moving into our next theme, here we start to look at how people's gambling behavior might relate to their spending or to their savings behavior. Excuse me. This time I'm focusing just on Monzo today. And amongst our Monzo customers, we were able to look at how customers engage with what Monzo call pots. Okay, so this is a basic function that Monzo customers can use that allows them to portion out some of their money from their main account balance into separate stashes or pots. It's a simple way for people to budget their money, essentially. There's two styles of pots that Monzo offer, which we label here as internal, which is the type of pot that I've just described, and also external pots, which are slightly different in that they actually are interest-bearing for customers. The first thing that we see here is that fairly considerably larger number of gambling customers are using the internal pots. So that's suggests that these customers who are gambling are making some attempts to portion out their money. It might be that they're using those pots to sort of portion out their gambling money. We don't know, but it suggests engagement with this kind of budgeting tool anyway, which I think is encouraging. Generally, though, what we're seeing is lower engagement with the interest-bearing pots. But what's more notable here is the difference, I think, in the balances for these external pots across the different groups. So in below average gambling customers, they tend to hold about 10 times as much in their interest-bearing external pots compared to the highest gambling group, which is a considerable difference. Both gambling groups are also a little bit more comparable in terms of average monthly transfers into these pots, but they're still saving considerably less per month than non-gambling customers. So that's a little bit of insights into what we found in terms of how gambling relates into people's savings behavior. We're seeing some engagement with these pots, even from the gambling cohorts, but not as much saving into these pots in any way, shape, or form compared to non-gambling customers, for instance. Finally, but on to research theme 3, we're talking now about how gambling is related to people's credit use. And so on screen here, we see some data pertaining to HSBC customers' use of overdrafts. What we see is that higher gambling groups are more likely to have arranged overdrafts, but the proportions of these overdrafts that are spent by each group in an average month are actually very, very similar. So each group is largely dipping into their arranged overdraft to the same extent each month. Where it gets interesting is in relation to the fees that each customer cohort, each gambling cohort is experiencing in relation to using unarranged overdrafts. So fees kick in whenever customers go either over their arranged overdraft or they apply whenever a customer hasn't asked the bank to put in place an arranged overdraft. And what we see is that on average, higher gambling groups are more likely to go over their arranged limit and for this to be more costly for them. So about 30% of the lowest gambling group tend to go into an unarranged overdraft, whereas about 60% of the other groups tend to go into an unarranged overdraft, and that costs them additional fees. In the report, which I won't go into too much detail in here, we have a bit of a deeper dive on people's overall levels of debt as well. And we have an analysis where we look at customers' total levels of debt, including their overdrafts, their credit card balances, and also their personal loans that they might have with HSBC. And we compare and contrast somebody's level of debt in 2019 to a year later. And I think an interesting observation that we make in that we detail in the report is that there seems to be about a tipping point at around £2,000 worth of overall debt, where what we see is that the highest gambling group becomes much more likely a year later to have accrued more debt once they go above £2,000. We don't see that observation in other gambling groups. So I think in overall terms, what we see is like an average month, the heavier gamblers might use marginally more overdraft, but taking a longer term perspective, it shows a more significant buildup of debt. Very finally, amongst our Monzo customers, we were able to look at gambling block use. For anyone unfamiliar, a gambling block is something that allows customers to essentially stop all gambling transactions from happening from their account. And what we see in this case is that most people who use the block have actually never gambled, about 91%. And that seems surprising on the surface, but it actually is similar to some findings that Sharon found last year in some work that they had done into gambling blockers. So not entirely surprising in relation to other findings. What we do see, though, is that fewer gamblers use the block. However, the second observation that we have here is that gamblers who do use the block, roughly about a third of them are likely to have deactivated the block at some point as well. And additionally, we find, and in the report, we see that about a third of above average gamblers deactivate the block for more than a month at a time. Okay. The other key observation I want to share on this before I wrap up is that block users' average daily gambling deposits are considerably higher in the week prior to when they activate the block versus an otherwise typical week in the data. So for instance, for the below average group, their average spend is about $5.40 per day in the week before activating the block, whereas in any other average week in the data, that spend would be about £1. So it's a considerable spike. For above average gamblers, that spike is to £72 from an otherwise kind of daily average of around sort of £23 or £24. So that observation could suggest that there's these spikes that are observable in transaction data in terms of people's gambling behavior that could represent a timely moment for people to be kind of prompted about when they might want to consider using a block, for instance. I'm going to very quickly wrap up because I realize I'm a little bit over time. I think the first reflection I would share really is just I think there's real value in continuing to explore the use of transaction records, and that we did see a great degree of appetite from banks to want to work with us on this project, which is really, really encouraging. I'm just going to leave you with some basic kind of illustrative reflections for each of the banks before I wrap up. I think in relation to Monzo, just going back to what we just learned about gambling block there, we saw lower uptake of block among gambling customer users, or amongst gambling customers, but higher rates of deactivation in those customers as well. And it could be, for instance, because those tools, at least in their current guises, are pretty inflexible. It's just like a binary switch. It's kind of a nuclear option, essentially. It could be that maybe we will get better use of those tools, for instance, if they can afford more flexibility to how customers can implement them. In relation to HSBC, I think the key thing that we found was that while the highest gambling group appears to not be overburdening themselves, and it kind of in terms of their average monthly costs, the longer term impacts could be borne out in terms of increased debt. And so that raises the question of whether attempts to classify customers in relation to their magnitude of gambling should take both a short-term view in terms of, say, for instance, they're kind of a rolling monthly risk rating, but also take a longer-term view as well. Example, kind of, like an 8 to 12-month view outlook as well, in order to produce a kind of more comprehensive picture of the potential impacts on customers' financial well-being. And with that, I'm going to very, very quickly just say thank you to lots and lots of people who helped me over the past 2.5 years with this work. To Steve and Songlab at HSBC, to Natalie and Neil at Monzo, to Catherine at GambleAware, to Dave at the Commission, and then to all my colleagues at BIT as well, Aisling, James, Tanya, Lauren, and Rosanna, without whom this work would not have been able to be completed. So thanks very much. And please do feel free to reach out to me. My contact details are on screen. I'm very, very happy to discuss these reports today once you've got a chance to look at them. And please always feel free to ping me a message if you want to talk further. And with that, thank you very much. I'll hand back over to Helen.
Thank you, Simon. You got an extra 2 minutes there because you were so interesting that I didn't feel like I could interject and tell you to stop. That was absolutely fascinating. And I think there's so much for us to take away from there and think about in terms of for everything from what's the role of affordability checks that I know the Gambling Commission are looking at if we're taking a slightly different view of kind of longer term harm, and understanding what's next with gambling blocks as well. So hopefully some of that will come out in the discussion. I want to make sure we maximise time to hear from our speakers. So I'm going to hand straight over to Professor Sharon Collard. So Sharon is a professor of personal finance, that's a mouthful, isn't it? And a research director at the PFRC, so the Personal Finance Research Centre at the University of Bristol. And her research explores the intersections between vulnerability and personal finance. And she's going to tell us about a guide that they have published today, which is the culmination of a really significant piece of research. So over to you, Sharon.
Thanks very much, Helen, and hello, everybody. Like Simon, I'm going to share my screen, so just bear with me a sec. Okay, hopefully you can all see that. Brilliant. So thank you very much for having me here today. We are delighted to be launching our report, our guide, which is on gambling vulnerability and FCA compliance. I'm one of the authors of the report, and my co-author, Katie Cross, is in the audience today as well. So the report is basically looking at how financial services firms can achieve the best outcomes for vulnerable customers who gamble. And it also does touch upon people who are affected by other people's gambling. So I just wanted to say a little bit about the background, how did we come to do this piece of work? Well, really, it was, we've been doing work with GambleAware, who funded this guide for the past couple of years. And the early discussions that we've had with people affected by gambling harm suggested that they felt quite frustrated at what they perceive to be a lack of understanding of harmful gambling by financial services professionals, and indeed professionals in other walks of life as well. And they felt that it would be really good if financial services professionals and other professionals had a better handle on gambling-related vulnerability and harmful gambling. So our three aims behind the guide that we've produced, firstly, was to try and convey some of that lived experience of harmful gambling and the effects that harmful gambling can have on people's lives, and how it impacts on their finances and more generally. The second aim was around how financial services firms can respond to gambling-related vulnerability in their customer bases. And the third aim was really to provide some examples and some case studies about what financial services firms are already doing to help people identify and support people who are at risk of harmful gambling. So as Simon said earlier, I'm similar in that this is a very kind of quick run through some of the things that we've covered in the guide. There is much more in the full guide, and there's a link to that at the end. So what we know is that at least 1 in 10 adults in Britain experience harmful gambling, either because of their own gambling or someone else's. And in terms of numbers, that's a conservative estimate. It's probably at least 5 million people, 5 million adults in Britain. And what we've done with the practical guide is to take the expectations of the Financial Conduct Authority in relation to how financial services firms are expected to treat customers in vulnerable situations, and actually translate that into a harmful gambling perspective. So we've taken the FCA's 6 expectations and we've related them to harmful gambling to come up with 6 ways that financial services firms can address gambling-related financial harms that may have knock-on benefits for other gambling harms, such as people's mental health, as Helen's work and her colleagues' work at MMHPI has so clearly shown. So let's move on to talk about those 6 things that firms can do. The first is to understand customers' needs. Simon talked about transaction data, and what we've found in our research from what banks are doing, banks and others are already doing, is that proactive data analytics can help firms understand gambling-related vulnerability among their customers and take action, importantly, to prevent that harm happening. So we have an example here. One of the bank representatives that we talked to through their own analytics had seen a correlation between customers that experience gambling harm and those that end up with their collections team once they had got into debt. And so the bank felt really it was in their own interest to help customers early on rather than allow them to get into that collections process. And we know from publicly available data that there are particular groups at risk of harmful gambling, and those groups include men, younger adults, people from lower socioeconomic backgrounds, and people from minority ethnic backgrounds. And those groups are also, what we see is that those groups are overrepresented in some financial services sectors related to borrowing. So there's evidence that some of those groups are overrepresented amongst users of high-cost credit, motor finance, overdrafts, and credit cards that aren't paid off in full every month. And so what that means in practice is that, for firms with customer bases in those sectors, they need to be thinking about the fact that actually they might be dealing with people who are at a higher risk of harmful gambling, and how that correlates to the products and services that they use. So moving on to the second thing that financial services firms can do to help address harmful gambling it's around building skills and capability. In the research that we did with firms, they very often had a vulnerability strategy, but it was much less common for them to have harmful gambling as a specific part of that vulnerability strategy. And so I think there is a case there for firms to make sure that harmful gambling is a standard feature in their work on vulnerability, given the impact that it can have on people's lives. The other thing that we found was important was for financial services firms to prepare their frontline staff for what they termed bad paths. And this might be where the interactions that frontline staff have with customers around gambling might be particularly difficult or don't go very well. And that might be situations where somebody doesn't recognise that their gambling might be harmful. It might be a long-standing customer that the frontline staff have developed a relationship with, and where it's difficult to bring that up. And I think the quote from a credit union representative in the research kind of captures it here, where she talks about having a responsibility to their loan officers to give them tools and resources to handle those difficult conversations, because we also need to think about the well-being of the frontline staff that are dealing with these situations day in, day out. So moving on to the third way that financial services firms can help address harmful gambling, and that is around designing products and services to avoid potential harmful impacts. Now, in the guide, we look across a range of different product types, but lending was the one that came up most commonly among the people with lived experience that we talked to, as something which had almost invariably exacerbated the harm they'd experienced from gambling. And what we saw in our research was that firms were developing lending criteria to assess, so that they were able to assess credit applications where they had identified gambling as being a particular issue and potentially a cause of harm. And they developed those. What was very clear from what firms told us is there isn't any one-size-fits-all approach, as you might expect, because it needs to be tailored to a firm's target market, to their product range, and to their operating model. And some of the ways in which firms were kind of developing those lending criteria was using data such as the Financial Ombudsman Service decisions and open banking data that they were collecting with consent from their customers. And I think on the left-hand side there, we see, why it's really important for lenders to think about this. The Financial Ombudsman Service complaints and decisions that we looked at in the banking, credit and mortgages sector, we were able to search those decisions that feature a keyword of gambling. And this is a whole range of complaints that feature gambling, but some of them did refer to lending affordability and customer complaints about being lent when that wasn't affordable because of their gambling. And what we see here is that the number of complaints and decisions to the Financial Ombudsman Service has been increasing quite sharply over time, and the numbers of those complaints being upheld, so that is where the Financial Ombudsman Service finds in favour of the complainant, the customer, that's increasing as well. And chiming with that, actually, one of the banks in the research told us about their own analysis of complaints that had mentioned gambling. And what they found was that around 40% of those complaints where gambling was mentioned were from customers who thought the banks should not have lent to them because of their gambling. So I think there's some evidence there, I think, that actually there's more work for lenders to do here to make sure that their products aren't potentially harmful. The fifth thing around that firms can do in order to address harmful gambling and help people who are affected by harmful gambling is to respond to customer need. And it was very clear from our research, and will be so many people in the audience today will have experienced this or know much more about it. Harmful gambling has complex and difficult roots. It's often linked to trauma. And so for someone to open up about their harmful gambling may mean overcoming feelings of shame, embarrassment and worry. And it might take them quite some time to do that because of those very deep-rooted and complex issues, which are very often related to harmful gambling. And as we see, I think that's sharply illustrated here by what Jill, one of our interviewees, told us. She was in debt to several credit card companies, and she hadn't told them that it was because of her gambling, because she felt so ashamed. And her gambling had increased over the pandemic. And she didn't want to tell them because she didn't think they would be sympathetic. So, how can firms respond to this and kind of help people to disclose issues where firms might be able to help? Well, they can actively create what is known as a good disclosure environment. And that means making it simple for customers to tell them about a gambling related support need, or indeed any other type of support need, but also to have supportive messages across all communications, whether that's phone, face-to-face, web chat. And some of the firms in our research and some of the credit unions had pages on their websites, for example, which provided information about, if people worried about gambling, and how the firm might respond to that and what help they might be able to provide. So moving on to the next way, the fifth way that firms...
I'm going to have to ask you to wrap up in about a minute or so. Sorry.
Okay. Yeah, that's fine. So the next way is around communicating effectively. And this is about firms making sure that they communicate clearly and jargon-free, because harmful gambling can impact people's ability to process information and make decisions, as can mental health problems, which can co-occur with harmful gambling. And importantly, I think there's also a role for firms to undertake test and learn exercises around proactive consumer communications where gambling is identified as a potential issue. And we have an example there on the left of a firm actually doing that. The final area, the sixth and final thing that firms can do is to monitor and evaluate whether they've met the needs of consumers affected by gambling-related vulnerability at both an individual and aggregate level. So that's a quick run through. I'm sorry I've run out of time. Sorry, Helen. There's a lot more information in our guide, lived experience case studies, tools and resources for firms, and practical examples of what firms are already doing. Please do download the guide and have a look, and very happy to hear from you if you've got comments or want to know more. So thank you very much.
Thank you, Sharon. Apologies for interrupting. It's a true power hour, this session. We've got so much to get through, but do have a look at Sharon's full guide. One of the questions that's been coming in on the chat is where you can find them. If you go on GambleAware's website, both of the big publications that are out today are on there, so you can find them in one place, or I know that Simon and Sharon both shared links as well. Right, so I'm going to hand straight over to Natalie Ledward. Natalie leads the approach to vulnerability, accessibility and financial inclusion at Monzo, and uses her experience in inclusive design and technology to develop ideas to reduce barriers and to empower customers, including their work on gambling. So over to you, Natalie.
Sorry, can you hear me?
We can, yes.
Good start. Okay, thank you so much, Helen, and thank you for inviting me here today to talk about our work on gambling harm and the role of financial services. Got a lot of work to talk about, but I'll be quick to make sure that we've got time for questions. So what I'm going to cover today is just a little bit about Monzo, who we are. I'll talk about our gambling block, our support at Monzo for customers, a little bit of reflections on key findings, and then a few kind of ending thoughts on the role of financial services in reducing gambling harm. So just to start with, what is Monzo? We're a bank. We are a bank that lives on your smartphone. We're a relatively new bank. So we were founded in February 2015, and we only got our banking license in April 2017. So still quite new to the game. That probably reflects in the data as well. But we are growing very quickly. So we now have 5.3 million customers. The majority of our customer base, just to give you an idea of our demographic, is under 40, and the majority live in big cities. And this is our company mission. So we really want to make money work for everyone. And that means offering all customers financial visibility, a clear understanding of their spend, with helpful tools to manage it, and human support when they need it most. And that's what my team are here for. So we're really here to make sure that we're considering every customer and finding ways to meet their needs. At Monzo, we don't have particular checklists that define what makes someone vulnerable. It really depends on what each person's situation is at a particular time and whether it affects the way that they deal with us or the money. the types of customers that we're supporting are going through really difficult circumstances that affect the way they manage their finances. So this includes everything from health diagnoses, addictions such as gambling. We really try and help customers put proactive measures in place to make sure that they're really staying in control of their spending, and really also try and help customers engage with long-term support outside of Monzo. So since 2017, when we got our banking license, we've worked really hard to try and launch some industry-leading initiatives that have pushed forward innovation, particularly around vulnerable customers. So those initiatives continue to help us, continue to help our customers with the skilled support and service of our rather large now specialist support team. But just to go back a few years, so in 2018, we launched the first gambling block on a UK current account. It was our first big project in the team, and it was based really on a rise in customer requests. So our customers were asking for this tool. And just to kind of really briefly explain it, when customers buy something with their Monzo account, each transaction is tagged with a code, and those codes just help us identify the merchant that they're paying. So to build the gambling block, we put together a list of those codes that let us identify when a customer is making a payment to a gambling merchant. So this is a lot of information, going through it quickly. Hope you're all still with me. I'm just going to go through a little bit of an overview of the support that we offer through the gambling block and the kind of surrounding support. We're really on a journey with this though, and it's really exciting to hear the work of Simon and Sharon today, particularly Sharon's work. We obviously we have our own approach here, but it's really exciting to see new guides being published that we can really incorporate and improve our kind of approach and develop it. So just to explain how customers interact with our gambling block. To turn the gambling block on, customers see this screen. They'll find the screen in the settings with an explanation of what it is, how it works. And to disable the block, customers are directed to chat with us. So it's really easy to turn on, a little bit harder to turn off. Let's move on to the next slide. So if customers try to turn off the gambling block, or they just feel like they need some support, they can chat to us. They'll find help articles on topics such as addiction in the help section of the Monzo app and on our website. So this is just an example of one of our help articles. And we really want to try and encourage customers to tell us about their situation. So we've got a series of useful help articles that all start with talking to us about. So it might be talking to us about gambling addiction, talking to us about mental health. That series of help articles all take you to this tool. So it's called Share With Us. It's a direct link to our specialist team at Monzo. Here, customers can disclose any difficulties they're having, from gambling disorder to mental health struggles. And if they let us know what they're going through, we can try and help get their account set up with limits and controls to really try and help manage finances. And we can also point them in the direction of external support should they need it. We want to be able to discuss gambling with customers in their own words so that we're most useful to them in the future. So these are just some examples of things that customers often share with us. And just to kind of, I think, bring this to life a little bit more, we've got customers that have been really happy to share their stories around their experience with this. So everybody can kind of explore our blog. This is an example of one of them. I thought I'd pull out a quote that kind of, I guess, really struck me when I read this customer's experience. Having a bank that understands the problem has been a relief. With Monzo, if anything untoward happens, you know there's someone to speak to who'll help and make you feel there's nothing to be ashamed of. It's helped a few times when I've had a bad moment. And I think this really kind of goes back to what Sharon was saying and, really captures that stigma that people feel when they're kind of talking to the bank. And this is something that we've really worked hard on to try and build trust with customers and really encourage people to talk about their circumstances. Another case study, another customer who's been happy to share their experience on our blog. And another really great example of that kind of stigma, and also the fear. So I've never tried talking to my banks before, but when I opened my Monzo account, I used the chat within the app to say they shouldn't let me borrow any money, that I didn't want to get an overdraft or any loans. It was really straightforward and all agreed through online chat. So I think when it comes to talking about the role of financial services and what we can play, I think the first part starts with trust and building that trust back with customers, encouraging them to talk about their difficulties and their circumstances. So less than 10% of customers, as it stands to this day, have ever turned the block off. At the moment, around 355,000 customers have turned it on ever in the last 3 years. And we've done our own research through analysing data, through customer surveys, but it's been really exciting to kind of have this really in-depth research with Behavioural Insights Team. So I just want to reflect on a few of the findings that I think is going to really help us at Monzo. So the findings are really useful to us because they give us a good steer on further themes to explore. One of the biggest challenges that we've always had at Monzo, I guess, is in two parts. Our maturity, we're a very new bank, so we've not got tons of data and historical data to work with. And then the other side of this is, what does gambling, what does harmful gambling look like on someone's account? The indicators of above average gambling give us a really good idea of signs that we can look out for that will really help our support teams identify potential vulnerability, but also we can start to use this in our more proactive data development, which is really exciting. This is also really interesting to us. So Simon didn't pull this out in his presentation, but I wanted to pull it out for mine. Really interesting to see that gambling activity tended to increase from Thursday to Saturday of each week. We've always made the assumption that it's going to be Friday to Sunday, right, over the weekend. So basically, we've been exploring broader spending controls at Monzo in the last few years. And I think one of the ideas that we might revive based on some of this research is time-based spending controls. And that's because this is really interesting. We've got some steer on, actually what we assume are, days where people might struggle. It actually might be different than what we expect. Then also there's a wider topic to explore with the impact of gambling harm on savings behaviour. Simon touched upon it, and there's loads to unpack with the findings in terms of understanding how we can help support customers. But this is really interesting that, below average gamblers contributed 42 times as much money to an interest earning savings pot. So, how can we really raise awareness or encourage our customers to use interest earning savings pots and really help encourage savings behaviour? So just a few thoughts to end on the role of financial services. Our role, I think, is raising awareness and really reducing stigma. I mentioned it before. Increasing trust is really important, and making people aware of these tools, that they exist. And this includes talking about these tools to our own customers and making sure that people have visibility of them. So as an example, recently we launched a web page just to kind of really summarise everything that we offer in terms of gambling block and support. And I think that's the first important role that we play. Another thing we do, and this is probably quite an exciting one, I think, is really take advantage of the opportunities in open banking and advancements in technology. So for us, this meant extending our gambling block. So this was a recent project. We launched this in February. It was a pilot with TrueLayer to kind of extend our gambling block. So you can read more about it. I won't detail it further. But, I think this does go further than financial services as well, actually. So, for example, gambling firms can already access data with customer consent through open banking. So that question of affordability, I think, really is a collaborative effort to kind of utilise open banking. And then lastly, this is my final thought. So we do have a key role to play, but much of the work is still in its infancy. We're right at the beginning of the journey. The Gambling Act earlier this year, we thought really presented an opportunity to focus on some short-term achievable improvements. So we launched a campaign earlier this year with some of the people on this call, actually. And if you want to read about it, this is also on our blog. But this, I think, is a really good start. And there's, I think, an exciting future ahead. Sorry, I'm out of breath. I've whizzed through that so fast. But thank you so much. I'm happy to answer any questions directly. So here's my email address. I hope that was useful.
Thank you, Natalie. That was so fascinating, and really appreciate you getting through so much that you're literally out of breath at the end. Thank you. We've got a lot of questions coming in, and unfortunately we don't have very much time. So I just wanted to say now, before we get stuck into those that we can go through, if you've asked a question and we don't get time to get to it, some of the speakers have shared their personal contact details, but you can also send any questions to info@gambleaware.org. That's info@gambleaware.org, and they will try and make sure that your question gets an answer. We've got a few questions that have come through on the chat that are quite technical questions about how things work in the research or in Monzo's tools. I'm going to leave some of those questions and prioritise the ones where we can have a bit more of a discussion as a group to make the most of the time that we've got here with the whole panel, but I'll make sure that those are passed on, so hopefully you can get answers to some of those ones. So I'm trying to group questions a little bit so we can get to as many as possible, and there is a bit of a theme about the responsibility for financial services organisations to be proactive in analysing data. So we've got a question from Chris Fitch. Hello, Chris. I'm sure everybody on the call knows Chris already, but it's a question here about the FCA guidance appears to tell firms that they don't have to proactively analyse account data to identify vulnerability. Is that a mistake by the FCA, or are we misreading it? And we've got a similar question from Will Mace saying, do banks have a responsibility to be proactive, or should you wait until a customer identifies a problem to you or makes a lending or credit card application? Who wants to go first on that question? So it's twofold, really. Do we think the FCA is saying you don't have to do it? And do we think that banks should be doing it regardless of what the FCA is saying?
I'm happy to jump in first here. Really, really great questions. I'm reminded at this point by some really excellent work that Helen's team at the Money and Mental Health Policy Institute put out in a report in October 2019, which asked these kinds of questions directly of customers. How would you feel about a bank being more proactively interventionist, looking at your data and maybe flagging to you that they think that they see signs of harm? I think one of the key findings from that report was that about 50% of people said, yeah, I'd be happy to do that if it's going to protect me from harm. Now, that still leaves 50% of people who wouldn't be happy with it, fair, but I think 50%...
Actually not, Simon. Sorry to interrupt. It was only 10% who wouldn't be happy. It was a very big chunk of people who said they didn't know.
Thank you for correcting me in that case. I misremembered. So that's even more encouraging, right? So, that's an encouraging basis upon which to start grappling with these kinds of questions. In relation to, should banks wait for a customer to sort of request support, or should the bank kind of proactively intervene? I think banks have a responsibility to help customers manage their financial lives, and many banks, offer tools and assistance, the kinds of which Natalie has touched on, that really are aimed at helping customers to avoid financial distress. And I think gambling harm is a form of financial distress. I think banks can be the sort of first responders in a lot of this case. They may see harm occurring before anyone else, including maybe even the customer themselves. I think that's where this gets tricky. It's like there is a risk involved in proactively confronting a customer with the potential that they might be, they may have an issue that they themselves may not have kind of confronted yet. That is a difficult question to countenance. I understand that. And so I think, Natalie's point about building trust is the first key hurdle that has to be overcome. If a financial institution can build that level of trust with their customer, that they feel that customer then feels comfortable enough to sort of reach out and ask for that help from their bank, and so long as the bank then has policies, procedures, practices, and strategies in place to deal with those requests effectively, I think that's probably where some of the trajectory of this kind of work could go going forward. Is how do we kind of build that trust further in order to kind of facilitate customers, I would say, who feel comfortable to sort of raise the flag.
Thanks, Simon. Natalie or Sharon, did you want to come in on the same?
Yeah, sorry, I jumped in ahead of you in inviting me to there, getting giddy. Yeah, absolutely. I think this kind of touches on my last point in the talk, which is that this work is really in its infancy for us, but it doesn't mean to say that there's not so much potential to be proactive. That is our plan. And, that kind of step of building trust is definitely the first step, I agree. And there's a whole conversation around customer consent, which is why we think open banking really offers a lot of opportunities, because it's a consent-driven thing. But, I think for us, we've always wanted to be very thoughtful about this. And because we are building up that trust, we need a thoughtful approach to make sure that we're not breaking that trust that we've spent, time building up. So, data like the data that Simon's presented today really gives us that steer on what our proactive approach might be. And that's something that we're going to be exploring in the next year, for sure.
Can I just quickly hop in, Helen, on the point about the FCA's expectations? I mean, the FCA expects firms to understand customer needs. And I think one of the ways, the clear ways that firms are doing that already is around proactive data analysis. So I'm not clear how firms could perhaps otherwise do it unless they are proactively analysing data. I would say on the trust issue as well, and that kind of relationship issue, from some of the data that was shared with us, where customers were unhappy was where banks hadn't acted, where there was evidence of harmful gambling, not where they'd acted and consumers had felt they'd overstepped the mark. And clearly there will be cases of that latter instance, but I think the risk that firms don't act where there is evidence of gambling harm is much bigger.
Thank you very much, Sharon. And I'm sorry we're drawing so close to 11 o'clock that I'm going to put a final question to the panelists. So all of those other rich questions, please do share them with GambleAware. And unfortunately, that's a whole extra bit of work for the panelists, but that we can come back with some insights afterwards. Thanks, Natalie, for the thumbs up. So the final question I wanted to come to you all with is, what are the barriers to doing this that we're still facing now? So we've seen really good momentum on this, but we know that it's not easy. So very quickly from each of the panelists, what do you think is the biggest barrier to firms really grasping the nettle of tackling gambling harm? And as a bonus point, if you've got any thoughts on how we tackle it, that would be brilliant. So I'm going to go round in the opposite order to that we just did, which means I'm picking on you first, Sharon. I hope that's okay.
Hi, yeah, thanks, Helen. I think from the research that we did, firms were really keen to hear from other firms and learn from their experiences and share what they were doing and kind of share good practice and examples. So I think that's been one of the barriers that hopefully will start to be broken down by the work that you at MMHBI and others are doing to bring those organisations together. Thanks, Sharon. Natalie.
I think just keeping up the momentum of this collaborative work, I've seen a real push in the last year. There's been lots more conversations happening across not just financial services firms, but across the whole sector and beyond. And I think that kind of joined up effort is really what we've been missing. So I'm excited to see what comes of it.
Thanks, Natalie. And Simon.
And yeah, I'm just riffing off Natalie's point about kind of that joined up approach. I think a potential hurdle to this type of work going forward is that different banks are likely to use different factors and different thresholds whenever they might create kind of customer segments, for instance, like we did in our work. And I think there needs to be a standard operating model that's now, we look at trying to develop involving all stakeholders. So, researchers such as ourselves, representatives from banks, other stakeholders involved in gambling harm, and even the regulators potentially as well, to develop this kind of a core operating model about how we could use transaction records, what ways we should use it, and what some thresholds should be so that we have a more uniform approach to this kind of work across different financial institutions.
Thank you all. That's really exciting and a nice note to end on. I'm very enthusiastic about that standard operating model. And Sharon, the idea that one of the challenges is being overcome by the very fact that we're here today is a nice positive note to end on. I just wanted to say an enormous thank you to the speakers for the amount of time and energy and effort they've put in today and in preparation to it, and to the GambleAware team for putting on such a fantastic event. I think it really has been very insightful. You can watch it again on the same link that you used to register on the GambleAware website. And also, thanks to GambleAware for allowing me to get a tiny plug-in at the end. But at Money and Mental Health, we have a practical best practice guide coming out next week. It's not the kind of huge depth insight that we're getting from PFRC and from BIT. The idea is to turn it into something really small and absorbable. So keep an eye out for that. And again, any questions that you didn't get to today, please send them to info@gambleaware.org. Thanks, everybody. I'm going to hand back over to Jane to close us off.
Thank you, Helen, and thank you to all of the speakers from GambleAware. We really do appreciate the time that you've put into this. I also wanted to say thank you to all of the attendees. I know that we've had a huge number of people join us today, and I expect that there will be many people watching this back online afterwards. So thank you to you all for joining us. And Helen, thank you for your magnificent chairship as ever, keeping us on time. I think that will be the end of the webinar, and we hope to see you all at our next webinar event. Thank you.